Hi there, welcome to Kneppy Invest and welcome to August 13, 2024. I have been quite busy today, so I have not had a close look at how the markets have performed. And to be honest with you, as I look at the indices above on market index, I haven't missed much. Although small caps and resources had a good day, tech has had not. Now, we have had a few companies, fairly big companies, release their results today. And this is via Commsec reporting season calendar, August 2024, and that was spot on. Temple Webster, Netwealth, Region, Challenger, CSL, and James Hardie, plus SEEK have all released some results. James Hardie was only quarterly results. In fact, in Commsec, they have what sort of results they are. So most of the other companies, actually all the other companies have released their financial year 24 results tomorrow. An interesting group of companies as well, including Pro Medicus. So I'm looking forward to doing this video today. Now, more than likely, this video will be a little bit shorter than some of my recent ones, but I have come up with the top 5 announcements of the day based off some of these companies that have released their results. Few companies did not make it into the top 5 stocks of the day, and I'll talk about those companies later in the video. No tweets, haven't had time to look at Twitter. And just for your information, there's no need for me to say this. The reason I'm busy today is because of the weather. So if you live anywhere between about Rockhampton and northern New South Wales, you might have noticed a little bit of weather, particularly in between Rockhampton and about Sunshine Coast, although it's starting to rain in Brisbane right now. That's why I'm busy. That's very busy indeed. I won't tell you what I've been doing, but that is why I'm busy. Some people don't realize weather is 24/7. I have been asked, is the Bureau of Meteorology open all the time? And say, yes, there is someone there 24/7 because, of course, the weather does not stop for us during the night. Anyway, let's get stuck into the ASX today. What are the best performing sectors, indices, and also companies? This might be first time I have looked at this, so hopefully no big surprises here. For some reason, my computer shut down, and it's acting a little bit buggy right now. First thing I note when I look at the sectors is healthcare is down at 3%. And there is one reason behind that, and that's because of CSL. Now, CSL is in my top 5 stocks today. Came in at number 5. Maybe it should be a little bit higher because it has caused the healthcare sector to be down. If you don't believe it, oh, by the way, real estate, financials, energy have had a good day. If you just click on healthcare here, and I'm hoping it works, there it goes. For some reason, this is really slow. I'm not sure what's happening. If we have a look at the companies within the healthcare, by far the biggest company is CSL, market cap of $142 billion. The next biggest, two next biggest companies are Cochlear and ResMed. Both of those companies have a market cap just above $20 billion. So when CSL goes down by 4.72%, it is going to affect the healthcare sector, because if you have a look at the performance of the other companies, some up, some are down. But CSL's results, I'll talk about that results later in the video. It's not really the results that have caused the share price to decrease. It's really the forward guidance. Otherwise, anything else down today? Let's have a look. And of course, there it is. It's just so buggy right now. Telecommunications down. I assume that is because of Telstra and Staples. So probably Woolworths, Coles down as well. Gold's had a really good day. And one of the companies that is an honourable mention is a gold company I own. So that's one of the reasons why that share price is up. Gold's had a good day, up 2.58%. And if we have a look at the ASX 20, virtually flat. And straight away, I'm going to say that CSL's down, Woolworths is down, Telstra's down. I'd say 9 down, 11 up. I'm going to say 13 up, 7 down. Oh, there you go. And the main reason I actually changed it was because CSL is down a fair bit. And I think there's a potential, there it is. WiseTech, Macquarie, there's Telstra, Fortescue, and Woolworths. So 3 of the companies I thought would be in that list are there. And the best performing company, ANZ, Goodman Group, Commonwealth Bank, Westpac, Financials had a good day, and REA Group. Okay, so let's get to the best and worst performing companies on the ASX today. I'm hoping a few companies are on this list that are in my top 5 stocks of the day and the honourable mentions. And we'll start off, not the losers, we'll start off with the gainers. Although I just saw Mosaic Brands there. I'm wondering what's happening to that company. Best performing companies. A few companies I've never heard of before. Australian Silica Quartz Group, fairly low turnover. Premier One Lithium, a little bit higher turnover there, but a fairly small company, market cap 2.3 million. We can move on to the next one. Australian Gold and Copper, up 29.55%. I did have a look at the announcements really quickly this morning, and I can't remember this company on that list. Just because I can't remember doesn't mean it's not on there. This is the whole reason I go through this particular process, and there it is. There was just a change of director's notice. I'm wondering if a director of this company has bought some shares on market today or yesterday or in the past week or something like that. Anyway, so this is Zhang Yong. You can see I've never been associated with anyone who is Chinese. I can't pronounce Chinese. Number acquired, 18.9 million shares for value consideration of $6 million. Was this on market? Share placement. Okay, yeah, not relevant. And let's have a look at the chart for this company. It's been all over the place, but generally upwards. So let's have a look. Oh, yeah, well, generally upwards if we're talking about the last 4 months, 3 or 4 months, but generally downwards if we're talking about the last 3 months or 2 months. Share price has dropped from 60 cents down to 20 cents and now has rebounded today. Don't know why. It's just the noise, this sort of noise you can sometimes see on the market. Another company called Savannah Goldfields is up 29% on zero turnover. Let's have a look. SVG on one trade, 2 shares traded. Worth of those 2 shares is 6 cents. That just shows you this company can move on virtually no trading. We're talking about 6 cents. And if you look at the orders, there's one at 2.4 cents, one at 3 cents, or a couple of 3 cents. So the next time this share price of this company trades, it will be down, and possibly it will be down 30%. So why am I talking about Savannah Gold? Yeah, let's move on to the next one. BPH, not BHP Energy, up 26.6. And then in number 7, we have Temple and Webster, up 23%. A fantastic day for Temple or Webster. They did release their results, and that company has come in number 1 on my top 5 stocks of the day. Just behind Temple or Webster, we have LTR Pharma, up 22.3%. Based off their announcement this morning, I put it into my honourable mentions. So let's have a look at LTP or LTR Pharma. They did some sort of deal. Here it is, secures global co-development agreement with Abtar Pharma. Did not open up this particular announcement, but I thought the share price might respond favourably, maybe not this favourably to it. And let's have a look at the chart for LTR. Since I didn't really have a look at the announcement, I'm not going to have a look at the announcement. Actually, no, let's do it. Let's have a look at the announcement. I want to just see if there's any numbers in this, any financial numbers. I am seduced, I suppose is a good word, when companies release these sort of announcements and there's numbers in it. And I'm looking at this and there's no numbers. So this would probably be the sort of announcement that wouldn't be able to seduce me because there are no numbers. If I see numbers, I'm a number person. And if I see numbers, I will be seduced. But the market is seduced, and a pretty good day for LTR Pharma. In fact, 2 really good days for this company. In fact, up, what was it yesterday? Up 17.7%, up another 20% today. And that was after a pretty good run back in May and June. And then the share price went sideways. Highly volatile in there, but during that period, the share price went sideways. And I'd probably assume day traders are loving this company right now. Otherwise, some small companies, including Glennon at small companies. So we have the small companies, probably a fund manager of small companies, which is a small company, has a market cap of 22.9 million. Aurora, up 20%. Okay, so this one is on my honourable mentions. There is a there was, I wouldn't say a failed takeover bid, but it was a rejected takeover bid, if I remember the title. Aurora, receipt and rejection. How dare you try to buy us out of NBIO from Lone Star. I would assume this was an opportunistic takeover bid because the share price of Aurora has fallen a fair bit over the last, last few years. Share price fell all the way down below $2, and now it's up 20% to $2.30. This is not the end of the downtrend. This is sort of not really the type of announcement I would be attracted to. Now, I think the reason why share price is up because there is interest, takeover interest, but this could be it. This could be, there may be no more takeover bids. And if the company releases a really bad financial result, share price could drop back below $2. So not the sort of announcement, again, I would be seduced by. And some interesting companies otherwise, Intellicare. Does Intellicare only have one L? That's interesting. I would have assumed it had two L's. No, it only has one L. There you go. Strike is interesting as well. Okay, so let's have a look by market cap. So we have Dexus. A few REITs did release their results today, and I didn't mind them. Region and ASK, which is a storage one, spun off from something else, Abacus Storage, spun off from Abacus. But I had a look at this one, and I actually don't mind Abacus Storage. King, I think I have to put the king there. And I'm wondering if that's the reason why Dex is up. I don't remember Dexus releasing anything today. So let's have a look. I could have missed it. Maybe they released something yesterday afternoon. No, nothing. So this is, I wouldn't say it's noise, but something lively is happening in the real estate or the REITs. Challenger. I'm calling this a breakout, and you'll see why I'm calling it a breakout when we look at the chart. This company did release the results, coming in number 3 on my top stocks of the day. Otherwise, we have Sims. I don't remember Sims releasing anything. Let's have a look. Oh, they released something yesterday at 5:09 p.m. Sims signs a binding agreement to sell UK metal. So I didn't miss that one. I did see it last night, and the market has liked it. This is a case of the market liking when a company sells something. It's not the best reason to like a company, and the share price has been a downtrend over the past, since the start of this year, and no interest in a Sims. Drone Shield's had a good day for those who have hung on to some shares in that company, and Bisley Steel has responded well or rebounded well. Other than that, nothing else is there. Okay, let's have a look at the worst performing companies on the ASX. Mosaic Brands, MOZG, are they doing some sort of share buyback or something? Not share buyback, what's it called? Consolidation? Response to media reports, nothing. What the hell is MOZG? Convertible bond, hybrid. I have no idea. There you go. So let's just skip past that one. Otherwise, most of these companies are fairly small on the worst losers or the top losers, maybe not the worst losers. Nothing of interest here. In fact, the biggest company on this list is Piedmont Lithium at $46 million market cap. And as we go further down the list, nothing in there. So let's have a look by market cap. And we have SEEK. Yes, SEEK. Down 7.5%. I'm pretty sure it was down almost 10% 1 point this morning. And that is in my top 5 stocks of the day. In fact, at number 2 because it was down 10%. And I'm always going to be interested when a company like this falls 10%. Phineas, I don't remember Phineas releasing anything. This could be just, again, a little bit of noise. Let's have a look at the announcements. 13th, they did release something. 9:14 a.m. Oh, no, that's his half-year result release date and conference call details. So I'm not sure. I don't think 100% pretty certain people aren't going to sell because of that sort of announcement when they're just announcing when they're going to release their results. So again, I just think this is noise. And this company, I actually don't mind this company, but the chart says to me, no, Michael, no, just going sideways. And I think it's just noise. Latin Resources, 7 West Media. 7 West Media. I'm pretty sure that company is releasing something tomorrow. Maybe I missed it. Yeah. Is that company? Yeah, they're releasing something tomorrow. Maybe they're being sold off in anticipation of bad results. Seven West Media getting sold off. Chart looks absolutely horrendous. Is this the worst looking chart you've ever seen? Well, maybe not, but it's among the worst. Maybe not the top. Brazilian rare earths down. Roro Biosurgery down. Frontier Digital Ventures down. High Pages. A fair few Frontier Digital Ventures and High Pages, sort of the same sector. And that's it. Acton and Gen again down after big down day yesterday. No, a bounce today, down another 8.1%. Okay, so let's have a look at the top 5 stocks of the day. Before we have that, I'm just going to talk about a few of the, very briefly, the few of the honourable mentions. The first one was a company called Abacus Storage King, up 4.6%. I actually had a very quick look at this one. And when I say very quick, I mean very quick. I went through the presentation in about 20 seconds. And what I did see in that 20 seconds, I liked. Now, when I look at the chart, I go, no. But I did like it. I went, this could be an interesting little play, possible little play. I've already talked about LTR Pharmaceutical, West African Resources, so up 4.3%. They actually did release an announcement today with a word I like, surprises. Well, you could hate the word surprises if it's a bad surprise, but WAF Kiaka South surprises with 22 meters at 7.6 grams per ton gold. I liked it, and I thought, maybe that's why the share price is up, but gold's had a good day today. And if you have a look at the share price or the chart for West African, what can you say? It's if you look at the longer term, it's been in an uptrend. They did a capital raising recently, so the share price had suffered a little bit. That was on the 8th of August, but the share price has recovered significantly since then. And when I say significant, was it this company did? No, the share price dipped because Burkina Faso adopted new mining code. That's right. I think this company did a capital raising a few months ago. Yeah, there it is. Capital raising 4th of July. So we're talking about 1 month ago. I think I'm thinking about Bellevue Gold did a capital raising recently and the share price dropped a fair bit. Okay. So that's West African Resources. Up nicely today. Another REIT called Region. Flat. This company owns like Woolworths. Well, they don't own Woolworths. They own stores where Wolves are and Coles, I'm pretty sure. And let's just have a look at the chart for Regions. So you would think that's pretty defensive and pretty safe. So I did have a look at their customers, and it was a pretty good quality or list of good quality companies. Although I don't consider Woolworths a good quality. No, I would consider Woolworths a good quality company. I don't consider Woolworths a good quality investment. Now, I think there is a difference. Definitely Woolworths is a good quality company, but not a good quality investment. And if you have a look at Region chart, I'd say this is not a good quality company either. And again, it's REIT. I'm not the biggest fan of REITs, but I think there is an opportunity to buy some of those REITs at interesting valuations. Okay, back to, that was just a phone call, back to the video talking about Region, and I completely forgot what I was talking about. I think that's probably it when it comes to this company. James Hardie released their quarter results. They were okay, nothing too great, and the share price is down 3.37%. This is the sort of company where I do oscillate between calling it a high-quality company or good quality company and not so good quality company. So I'll call it maybe a quasi-high-quality company. And that means I'd probably more likely have a look at the chart for this company. And if the chart looks okay, I could be interested. And at this point in time, the chart looks meh. The chart looks really good through most of 2023 into start of 2024. And I was a trader of this company back then. I am not in James Hardie right now. And finally, no, that's it. The next on the list was Aurora, and I've already talked about it. So let's get to the top 5 stocks of the day. And we're going to start with CSL. Share price down 4.5%. It was down a little bit more earlier in the day. Open at $300 now down to $294. The results on the surface looked pretty good. I actually thought when I first saw the numbers, I went, I think the market's going to like this. So we're talking about growth. And the other thing I should mention is if you do look at their forward guidance last year, these results actually were almost bang on to their targets. So these results were not a surprise. So everything is up, we'll say between 10 and 15%, roughly. Dividend, nice growth in dividend, total full year dividend up 12%. And NPAT up 20%. At constant currency up 25%. So really nice numbers for CSL. Now, the only thing that made me pause when I looked at this, not the numbers, it was just the outlook. I'm pretty sure they have the outlook in this. Here it is, the outlook. I would expect, or suspect, not expect, I do suspect the reason why the share price is down is because the market is a little bit disappointed by the outlook for financial year 24. So revenue growth, approximately between 5 and 7%, and NPATA expected to be about 10 to 13% higher. So I think the reason why the market has sold off on CSL today is just the outlook. Not the numbers itself, it's just the outlook. I do think there is a possibility that these numbers will be better by the end of financial year 25. So I wouldn't be surprised if the company does release an upgrade during the year. And that is the way to play it if you are management. If you're not sure about the current year, just put in really conservative numbers, and that way you can do an upgrade in the future, because the market is much more receptive of upgrades than, well, they hate downgrades. In fact, if a company does a downgrade, the share price can fall significantly more than if they started the guidance cycle at a very conservative level. So possible, this is just a possibility. Maybe this is a conservative guidance from the management of CSL. They do talk about why, just talking about some market conditions remaining challenging, that sort of thing. But yeah, I think this could be a surprising story over the next year. The other thing, I wouldn't be surprised if I did the numbers right now, and I haven't done the numbers, that CSL right now, or maybe in the next year, is the cheapest it's been for maybe 10 years. Yes, 10 years. Because the share price has done nothing the last 4 or 5 years, and the company has grown. So if the company keeps on growing, right, keeps on growing, the only reason why the share price is going sideways is if the company or the share price or the valuation is going through multiple contraction, which means a P ratio and all those other valuation metrics actually dropping. So the market is less and less willing to pay a premium for the company. And I think CSL is undergoing that right now. The market is a little bit less willing to pay a premium for this high quality company that is growing. This company is growing, unlike the other big companies on the ASX. Like Woolworths, Woolworths is growing a little bit. Like CBA is not really growing. BHP, you could probably argue that's growing, but CSL has that potential to be significantly bigger than those other big companies on the ASX in the next 5 to 10 years. So I am a shareholder of this company, and no, not even thinking about selling any shares. Anyway. So down 4.61% as we speak. So that's coming in at number 5, CSL. Coming in number 4, Netwealth. Share price was down a fair bit earlier. So I did see it down 8% at one point. I thought, oh, Netwealth down 8%. So down 5.3%. I did not have a look at these results. So I am assuming, and this is just me making assumptions, that the results were pretty good if you look at the underlying numbers. And the reason I say that is because this company has a fairly high valuation. The PE ratio is probably really high. So you can see here the headline number, NPAT increases by 24.1%. This company needs to grow its revenue, its profit by a fairly large amount to justify the valuation. So everything is growing. Funds under administration up 25.2%. Now, by the way, I am a customer of Netwealth. I should say that. I'm not a shareholder, but I am a customer. EBITDA up 23.8%. Inflows of 1.2 billion for July 2024. NPAT 24.1%. I've already mentioned that. Earnings per share up 24.1%, just like NPAT. So 33.8 cents. So this company has a share price of 20.76. So what was the earnings per share? 33.8 cents. Let's do a very quick P ratio. So the price is 20. and we'll say 50. Divide that by 0.338. This company has a P ratio of 60.7. That's why the company has to keep on growing at a pretty good rate. So everything looks pretty good when you look at the numbers. Now the question comes, did these numbers slightly disappoint the market? Did these numbers come in slightly below expectations? And the other way the share price of a company could move higher or lower, in this case lower, is if the company releases any sort of guidance that disappointed the market. And I don't know what the guidance was expected. You can easily Google it, like Netwealth. Let's Google it. There'll probably be Netwealth. There'll probably be like news. There'll probably be like some Motley Fool articles. Yeah, Netwealth share price tumbles despite record 22 billion financial year 2024 inflows. And another one from Motley Fool, why CSL, James Hardie, Netwealth and SIG shares are dropping today. I'm not sure. And here's one from A Rich Life. Well, that's from February. So you could open one of these articles from Motley Fool. I do look at these articles on occasion just for giggles. So they're saying that Netwealth fell. Okay, so they're actually comparing it to what Morgan's expected. So Morgan's was expecting a 19% revenue growth and NPAT growth of 25%. So Netwealth's result is marginally behind this estimate. So that could be an explanation why the share price is down, because it didn't quite beat these experts' estimates. Okay, I'll just leave that article up just in case. I want to talk about some of these other companies. So that's Netwealth. Now, when you have a look at the chart for Netwealth, nothing to really complain about if you're a shareholder of this company. It's a beautiful looking chart. Share price has pulled back today, although fair bit of indecision today. Share price has been all over the place. But the chart looks beautiful, really broke out late last year and has just kept on going. So again, the valuation of this company, as a rule, valuation does matter. So let's have a look at the 5-minute chart. Oh, yeah, the low of the day was actually around 11.40, so it wasn't on open, which is interesting. So there's a fair bit of selling in this company in the first 2 hours of trading. Share price has recovered. There you go. So that's Netwealth coming in at number 4. Coming in number 3, we have Challnger. This is probably my favorite announcement of the, well, equal favorites. The reason why it's coming in number 3, not number 2, is because SIG share price was down a fair bit. I could imagine myself taking a trading position in this company tomorrow. Few interesting things about this company. The results beat expectations. I'm pretty sure I read that. And I think I might have read that in one of their announcements or their releases. So these results beat expectations. Nice growth. So profit before tax up 17%. Profit after tax down, well, that's statutory profit, down 24%. Group assets under management up 21%. Full-year dividend up 10%. Normalized earnings per share 60.9 cents, up 14%. Normalized return on equity 15.6%, up 290 basis points. And on track to achieve REO target in financial year 25. So there was just that statutory profit. So that's probably some one-offs in there. So everything else is up, and these results actually did beat expectations. I'm pretty sure I read that somewhere. Might have been in their presentation. Let's have a look. And the other thing, yeah, let's have a look. I went through this presentation very quickly, and I just saw that. Yeah, here it is. This would have been it. So normalized net profit before tax, 608 million, above the guidance range, which was 555 to 605 million. The other thing I liked is their guidance looks pretty good as well. No qualms with their guidance. Here it is, guidance. So net profit before tax, 640 to 700 million, and the midpoint of that is a 10% higher from this year. And the profit after tax, 10% higher at the midpoint than financial year 24. So possibly some really nice growth again in financial year 25. Now let's have a look at the valuation of this company. This is what is intriguing to me. And again, valuation matters. And I really like trading breakouts when companies look good value. So this company has earnings per share this particular year. What was it? where was it? Earnings per share of 60.9 cents. Share price is $7.34. So let's do that earnings per share or the P ratio calculation again. If I can find my calculator, there it is. So share price is $7.34 divided by what was the 60.9 cents divided by 609. P ratio of 12 with possible nice growth in financial year 25. So there is potential that this company is pretty good value. Now, the other thing I'd like to see is what is a typical P ratio that the market is willing to pay for this company. Now, I won't do that now, but then I had a look at the chart and I went, oh, this looks interesting. This is a breakout. I'm calling it right now. Now, the reason I say it's a breakout, the last two times we saw the peaks in the company's share price was back in July 2023, so we're talking about 1 year ago, and also in February 2024. And the share price struggled to get above $7.20. Really struggled. Today, the share price is, or right now, the share price of Challnger is at $7.37, just above that resistance zone. So this is a breakout. Last time the share price was as high was back in March 2023. We are talking about almost 18 months ago. If you have a look at the weekly chart, share price really not doing much over the past, we'll say 4 or 5 years. I would love to see the share price get above 780. That would be a multi-year high. We're talking about almost a 5-year high if it gets above that. I think this company, and what's happened with these results and the market reaction, this company is looking good. So definitely thinking about taking a trading position in Challnger Group. Just based off these results and the market reaction. That's it. That's all I need. I might not like the company as much, but I am trying to be as unbiased as I can when it comes to my trading decisions. Coming in at number 2, a company I have zero inclination to buy, even though share price has fallen 7.3%. Car Group released their results, and REA Group released their results over the past few weeks. Those results much better than SEEK by far, and I think the market knows it. So these were actually, in a way, fairly disappointing results. Again, I don't know expectations, and I haven't had a look at the guidance, but the numbers were all down. We just had negative numbers everywhere. Now, some of these numbers were affected by sort of a one-off impairment of Xiaopin, which is something they sold, but revenue down 6%. EBITDA down 14%. Maybe the reason a lot of these numbers are down is because of that disacquisition. What do you call that? What's the opposite of the acquisition? Disposal. But anyway, everything's down. Profit down 31%. Yeah. Okay, and they mention the headline, this is from the CEO and Managing Director, Ian Narev. Headline financial outcomes for the year were impacted by a significant reduction in job ad volumes across APAC relative to previous record highs and the impairment of our investment in Xiaopin. Operational outcomes were pleasing. There you go. So everything's down. And did they give any guidance? There is some guidance. So revenue, fairly, I suppose it's not that. Between 1 billion and 1.14 billion. And that's lower. So they're expecting revenue to fall again. And expenditure, EBITDA 430 to 500 million. So very large range there. And profit 130 to 180. 130 to 180. So they are expecting dropping numbers again in financial year 25. Maybe the management is being a little bit conservative. Maybe that's what they're doing. But a drop this year, possible another drop in financial year 25. That is why the share price is down. Maybe the market didn't realize it was going to be that bad, the results, and also the forward guidance. And the share price is down 7%. Now, if you look at the long-term chart, weekly chart, nothing much happening there. No trend. And if you have a look at the daily chart, share price is getting to an interesting level. If the share price fell below, what level is that? That is, if the share price fell below, I'm going to put it about $19, that would be concerning. That was the lows of this company back in October and June 2022. It is not that far off now. And just the way this company is trading right now on the daily chart, I wouldn't be surprised to see the share price fall from here towards those levels. Although the bears and the bulls are fighting today. Share price has been as low as about $19 and about 50 cents. $19.61. So the share price has recovered a little bit today. And if we have a look at the 5-minute chart, yeah, the lows was just after the open. And we have seen a bounce in the last few hours. Okay, so that's SEEK coming in number 2. I have no interest in trading or even buying SEEK at this point in time, even though I suppose it has the potential, but it's just not realizing that potential right now. Now, another company that probably could be a breakout, and this company had to come in at number 1 because of the market reaction. Share price up 24.4% on their results. I had a look at the results, and I'd be honest with you, apart maybe the trading update. They did release a trading update. If you just have a look at the numbers, really nice growth in revenue, up 26%. But if you look at the margins, they're still really low. So EBITDA 13.1 million, 2.6 margins, 2.6% margins, fair bit of cash, $116 million of cash and no debt. So really good growth in revenue, but this company does exist on fairly low margins, and that means EBITDA and profit of this company is fairly low. But who cares? The market likes it. And their update, financial year 20, I think this could be one of the reasons why the share price is up a fair bit. The year has started fairly strong, and for the first 5 to 6 weeks of the financial year, revenue is up 26%. So there is potential the market does like that. I'm just going to have a look at another one of their results because I just want to show you maybe the investor presentation. And you can just see the effects of low margins on a company. So really nice growth in revenue, pretty high revenue, $500 million of revenue, yet the profit is not that high. So let's have a look at this. Where is it? I'm pretty sure there's a financial section somewhere here. This could, no, is that it? No, that's not it. Here it is. So this is, so it started revenue of almost $500 million, really nice increase from last year. As I've mentioned, gross margins of about 33.4%. They also spent a fair bit of money and have really ramped up their advertising and marketing. In fact, that increased $31 million. So that means adjusted EBITDA only $17 million. And when you take into account share-based payments, EBITDA at $13.1 million, one-off costs, so EBITDA $8.4 million. So add that back, still $13.1 million. EBIT at $2.6 million. And profit at $1.8 million. You notice profit fell a significant amount from last year, which was $8.3 million. So really, it's the revenue growth and maybe the outlook that has really driven the share price high. I just don't like the margins of this company, really low margins. EBITDA margins of 2.6%. But the market has spoken, and I can't ignore what the market is saying. I suppose I could ignore. Will I take a trading position in Temple or Webster? I don't know. This is the one where I'm just thinking, like Challenger, I can see value there. Is there value in Temple Webster at these current prices? And I just don't know. And the share price of this company can be quite volatile. I think the time to buy this would have been way back in mid of 2023 when the share price was much lower and the share price went on a really big run, pulled back a little bit. You could categorize this as a breakout. But the last time they released results back in, was this results? No, May. They must have released something negative in May. Share price was down 17.9% on the day. So this is, you could categorize this as a breakout, but I just don't know if I am there to even think about taking a position. Well, I suppose I am thinking, but I'm not sure I am there to actually hit the buy trigger for Temple or Webster. If you are a Temple or Webster shareholder, I'd love to hear your opinion because I could be completely wrong. Yeah. Suppose I didn't have to read that one. So that's all I have for this particular video on the ASX today, as it is raining outside. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek someone who is qualified and can speak to your own financial considerations, concerns, whatever. That's it for this video. Have a good day. Bye.